You're tuned in to Agriculture Today, and we start our Friday show with the grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are futures looking like right now in the grain market?
Well, we've had some gains over the last couple weeks. They're not, we haven't fully regained to the areas in that we had last summer or in 12, 18 months ago, but we have seen some gains from lows of well, say around for instance, say around August 23rd. We've had closes yesterday on December futures of 410 and three quarters. We were at 391 for D's futures a couple of weeks ago. For November futures, we closed on yesterday at 1023 and a half. We were at 973, so 50-cent gain from where we were again 2 weeks back. And then for wheat, we were for the D's contract at 588 and three quarters yesterday for a close. We were sitting at 535 a couple of weeks ago, and we still are trading the September contract, but it's in delivery period. When you go onto market information sites and see how many contracts are still trading there, not very many. Most traders have gotten out of the September contracts, have rolled into, again, D's, at least the D's contract for the December contract for corn and for wheat, and November for soybeans. So I guess that kind of begs the question. So why the gain? I think we have had some. Well, I think two factors. We have had some reports of some crop stress, at least a little more worry and uncertainty in different parts of the country. Uh, Again, more so in the Ohio, eastern Indiana area, parts of Kansas not doing as well, particularly dryland crops in the western part of the state for the most part. When you look at up into the Dakotas and parts of Nebraska, we've had not bad crops, but again, we had the independent crop tour come through a week or so ago, and said and talked about, pointed out how some of those areas were at least uneven, as you know I've been talking about, and not doing just tremendously. So we've got that in play, and we have coming up next week on Thursday, September the 12th, the USDA NASS crop production report, as well as the WASDE report, World Ag Supply and Demand Estimates. Those two come out of the same lockup, literally. So that 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 will bring some uncertainty into the market. And I talked about this before we came on to the air. So we had the August 1st crop production estimates, which are almost totally what farmers thought they had on August 1st. And the markets responded, dropped sharply lower. Well, since then, now we've had some dryness and some other maladies come in domestically, and some worries internationally in South America, of course, on corn anyway. And Seen markets prices come up a bit. So the USDA was out in the fields around September 1st. So just a few days ago, that those surveys wrapping up of what they actually saw with their objective yield surveys, and also surveyed farmers. So still, though, we're not finalized. We still have a fair amount of uncertainty about what the final numbers will be. And it's kind of a battle of which part of the country you're from. Again, Central Corn Belt, Illinois, parts of Iowa, parts of Indiana, tremendous looking yields, just tremendous. But it's on the fringes, on the margins, where the questions will come in. So we'll get the September report, but other than a few areas way down south, southern U.S., we're not doing any harvesting yet. When we actually get to the October report, we'll have at least started harvest in some of these areas, wet corn being cut, and you name it, and we'll have all that much more of an accurate picture on the October and November reports, and then again in the January final crop production numbers. So, September is a big month. We have that crop production report and the WASDE report coming out on next Thursday, uh, and, uh, and then at the end of the month we have the grain stocks report that'll come out, and really the grain stocks reports, the September grain stocks reports, I guess do at least a couple things. First of all, tell us how much, what the amount of grain use is, the final total quantity in for the most recent quarter ending September 1. So would that be I think yeah, June, July, August. There you go, the summer quarter. So we'll have those numbers, but also in the September reports, the USDA has a pattern here of late of basically once they get those about those four quarterly reports together, and they do their mathematics and calculations on how much grain's used here, there, whatever. That's where they've came back in past years and made some changes, some fairly substantial 50, 80 million bushels on one either way, and a lot of it lower on previous crops. So I think any adjustments to be made in the 2023 crop, or even 2022, probably 23, that's likely to come out there. So September is a month of where the markets will still be watching what's set for corn, soybeans, grain, sorghum, spring wheat, all of that will all be there. But then once we yeah, but there'll still be uncertainty just because September 1 we weren't cutting much. But man gracious, once we get to into the October report with October 1 conditions, and especially November, then we'll be able to nail this down. There are independent reports that have come out ahead in the last week ahead of our program, have been confirming of pretty high yield expectations, 182, 183, thereabouts. There, as one analyst said, well, we're all singing from the same choir book, in that's the expectation. So it'll be good to see how well, it'll be really important, not just good, important to see how that actually plays out once we get in the fields. I don't think anybody's expecting a huge drop in actual production, but I think there is still uncertainty about whether we'll get 182, 183, or we're more like 179, 180. So I think the approach taken in those models is going to be pretty important to consider. So, and I just want to say real quickly that we've had pretty good, very good usage through for all these crops. Low prices tends to help usage, so that's certainly been an issue, and some wheat issues over in the Black Sea region and in the EU that have cut back production. So that's been somewhat supportive, and bioenergy changes in India. They've switched over. They're switched over big into corn-based ethanol. So now they're an importer rather than an exporter. That's important, and we're just starting the planting season down in Argentina and Brazil. For crops, and it's really dry. It's like a delayed La Nina impact that we were worried about all summer, but now it's here. And when you look at the materials we put together internationally, that's it's dry down in especially in Brazil, and there's kind of a disease, leaf, insect disease, plague. That's impacted corn in Argentina is forecast down about 20% as farmers deal with that. So we got things happening, and we'll see where we go as we head off into harvest.
And Dan, today wanting to take the time to mention a question that you have received from a farmer this past week, because could bring some insight to our other Kansas farmers as well.
Yes, I was contacted by a farmer from the northeast Kansas, Atchison area. I was talking about the generally pretty good yield expectations in that area, and was wondering how to wrestle with harvest sales versus post-harvest storage opportunities. And as he and I were talking on this, I kind of came to the conclusion that that's pretty hard, especially in an area like that where they have anticipation of a lot of grain coming, to see that on the one hand that that basis will be very good. There'll be a lot of grain pretty much probably all filling up storage, and maybe some having to wait too. So that's a negative for that type of situation. And uh, and uh, we talked about how these USDA reports again, the yes September, but especially October, November could change the game a bit if US yields aren't as sterling as has been projected. So that's something to watch for. But then there were the big wild cards in the corn market. Probably the South America situation as we bounce back and forth is where the markets are concerned, what they're concerned with. So out of all that, of course, after we spoke, he was probably having the syndrome of wanting an economist that gave him one answer and not three. So but yet all those factors are out there, and I don't doubt that in a situation like that, you probably hold back to look at cash flow needs and sell what you have to generate cash. If you do have storage, you probably store to see if the situation changes, because again, once the U.S. crop is in, the market shifts its attention away from U.S. domestic supply to usage and international markets. And given all that's going on in Europe right now in the Black Sea region, and what the uncertainty in South America, uh, that the market right now is assuming won't be an issue. It's assuming it won't. If those things do come about, they probably give for corn and for soybeans uh, um, some higher prices that would reward storage. So it's kind of a step by step managing of risks and financial realities to deal with this situation. You probably sell what you have to generate cash, and then watch and see what develops through December, January, March, and then make your best profit maximizing, cost minimizing decision.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby. I appreciate the opportunity.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.